What do you got coming up for us?
Well, we're going to take a look at some option flow and talk about some automation, maybe get some automated trades on for next week.
Ooh, I like the sound of that. All right, Trading Made Simple with Sandy starts right now.
Welcome back, traders. This is Sandra with Trading Made Simple.
So let's take a look at the markets. Boy, we got a nice pump from the news this morning. You could see that SPY is already breaking through its resistance. And QQQ, let's take a look at that, also breaking through resistance. So we have a lot going on in the markets based really on reports and news events. So this is looking really positive. We've had a lot of volatility lately, and I want to go through a couple stocks here that have a lot of option flow in it. So let's take a look at, as an example, AAL, American Airlines, looking at the 15 call. Look at this. We are on a daily, we're into resistance. Let's take a look at a weekly. Somebody's looking for a run here. Looks like we've been actually in consolidation on a weekly. And this option flow would suggest that they are looking for a break of resistance. Our area of resistance is right at 14. They're looking for a 15 call here. So they are looking for it to break and possibly go to some previous highs, all the way to 19, right? So what we could do on a weekly, we could actually utilize that 1404 as a resistance level and say, I'll wait until we break through the area before we actually get into a trade. So even though we're seeing option flow, it's very important to take a look at the chart and then identify, right, what's looking good. So to me right now, what's looking really good is you got momentum crossing above the zero line. So this is of interest. We have basically institutional buying right now. So the institutions are running towards this stock. That's what momentum really indicates. But we do have a range that we've been in. And you can see that we were in this range on September 1st, and we're coming right back to it. If we can break that consolidation level at about 14, we can then see higher highs, right? So that's what we're looking for. That's what the institutions are looking for right now. You can see on a weekly, it's showing a high buy rate right now. And also on a daily, still looking good. So this actually looks pretty good, but our RSI on a daily is kind of getting high, and you can see where the last pivot high was at 1402. So if we basically stay within this channel, we may start working, right? It may get to this level and really start consolidating for the next move. Now, those calls on American Airlines were actually February 20 of 2026. So they are looking to stay in this trade for a little bit of time to make that work, to get that call over to 15. So that would be a really nice chart to look at, is to say, hey, look, don't get into it too early, right? Right now, we want to actually break the previous high. So if we break 14, why don't we call it 1410? If we break the high of 1410, we're going long. And that's a real simple way to utilize institutional flow with automation, right? You could just set that trigger. How would we do that? Well, let's get over to the trade tab here, and you'll see that we have all of our dates. And here's February 20th right here. We're looking for a 15 call. So we could go right over here, and you could see that that 15 call is $1. Now, if we wanted to actually, I like to put all the rules up front, right? Because that's what the institutions are doing. They're actually, it's all algo trading with their rules all up front. And so I really like to teach the same exact way. So you would just say buy custom with an OCO bracket. Let's get over here. And then now we have our order up. So as we have this order, we're going to just go into our settings tab, and we are going to start filling out the tab, right? So you could see that if you didn't actually click below that little line under symbol, you wouldn't even know it was there. So just click and it'll automatically default to what chart you're on. Click again under method and automatically defaults on mark, which is fine. Now you can see our trigger. If we click trigger, the first one is less than or equal to, the second one is greater than or equal to. If you ever have a doubt, just look down here and you'll see. So the first one is less than. We're going for calls here. So we're going to go greater than or equal to. And now we're going to put in that threshold that we talked about, which is, let's see, 1410 is what we decided. We wanted to break the previous pivot high to show confirmation that we are going higher. And that is a way that you could just easily look at the chart, make an analysis, program your trade instead of just an alert, because as all those alerts come in, you get desensitized. And then all of a sudden you're in paralysis analysis, right? Which one are you going to do next? If you already just program it in, then it'll just follow your rules that you set up front. That's how easy this could be. So now that we have our conditions set, this is the important part of the order form, because up top here is just all about option pricing. And you can do all of your work on option pricing basically here, right? The whole purpose of opening up this order is to actually work your conditions in. And so we just put in our conditions. When we break above 1410, I want to get into that long call. Now, what is the option price going to be when we break above the 1410? We don't know exactly. So what we're going to do is we're going to put in, we want to be aggressive buyers, but we don't want to pay market prices. So think about that. There are actually a couple levels that you can identify of how aggressive do you want to get into your trade, right? Market is the fastest. If you buy market, you're going to get in right away, no matter what the price is, but you're going to pay. It's going to be very expensive, kind of like Nordstrom pricing, okay? Now, if you want to be aggressive and still have it be fast, you can use buy the ask. It basically is saying, hey, look, you're going to pay what the market is asking for. I'm not going to give you extra. I'm not going to pay you market prices, but I'm just going to give you what the market is asking for. And so by doing buy the ask, 00, put this good till cancel because you don't know when it's going to cancel. Now you have your order completely set. And then what is the third way you can do this? You could actually put mark right here. If you were to put mark right there, this would indicate that you want to get the best pricing. You have no guarantees whatsoever. It's the third slowest way to actually get your market, get your order, triggered, but it's really good pricing for you. So what you need there is a lot of consolidation at that option price for it to actually click in. So just a couple things to take in consideration as you're thinking about how quickly you want to get in and out of your automations. For automation purposes, I really do like the buy the ask and sell the bid. And you get about 95% of your orders taken care of without any issue. And that's also to get in as well as out. All right, so we just saved that order. So now what is going to be our take profit level? Well, remember that institutional flow was showing that they're looking at the 15 call. Well, that 15 call could be your target. That could be your trigger. So what we want to do is just go into that gear settings icon again. And now we're going to say, hey, when AAL gets at or above 15, okay, tab out of that box. That is my trigger. That's when I want to exit this. Now I come up here. I don't know what the option price is going to be when American Airlines hits 15. So I'm going to say sell the bid. And you see how it has this 100? That means you're selling the bid plus $1. We don't want that. We want 00. Tab out and put good till cancel. And now you're good to go. So now you have your trigger already set. You've automated your buy and your sell with profit. What is going to be your stop loss? When you get to your stop loss, you don't need to go into the order form because everything that you can do with option pricing is right here on the front of your screen. So what we're going to do is we're going to hit trigger. So we have the opportunity to change these buttons. And you'll see it has plus or minus $1. Could you do that? Absolutely. Just remember $1 for each contract is $100. Okay. Keep that in mind. So you can actually limit your risk based on a dollar amount if you wanted to, or you could do it as a percentage. Clearly with the volatility that we had or have currently Currently, we have volatility, especially in quarter four. Why? Because institutions are actually moving positions. They're actually getting ready to sell their losers so they can claim it on their expenses. And then also they are just moving sectors, right? Because each sector has basically, a better performance during different times of the year. And so Q4, as an example, has its own sectors like energy that does really well in Q4 and so forth. So I have a video on that. Check out my YouTube channel and you'll be able to see that. And it's Trading Made Simple with Sandra. So here you can say a negative 25%. And then you'll see that the programming is telling me, hey, you can't set this in yet. You have an error on your page. So actually your platform on ThinkorSwim, and by the way, you could do this on IBKR as well, is telling you your program mistake. And what is time enforced? Time enforced is like, hey, look, either this is good till I cancel this order, or you could do day. And at the end of the day, this trade will just vanish if it doesn't get filled. So you want to make sure that these are all good till cancel. You can now confirm your dialog box. This is really important because sometimes people get like kind of fat fingered, when they're programming. And what ends up happening is they're making a mistake and they don't realize it. This is a really good way to just identify and read what you programmed to make sure that you're not having a mistake. So now remember, you can practice this, right, on a simulated platform, and it takes about 30 to 40 trades to really get confident in your programming. You're still a human and you'll still make mistakes, but don't worry about it. You'll make less the more that this goes on. That's why we always tell you to actually practice this on a simulated platform, get confident and consistent with your programming, then move to real capital when you're ready. So as you can see on this order form, we're saying buy this call when we get at or above 1410, that's my trigger. And then sell that call when we get to our target, which is at 15, or sell the call if we get to a negative 25% on the option price. And now we send that in, and now we are covered for that trade. Let's take a look at Goldman Sachs. A lot of money coming into Goldman Sachs. Let's take a look at the chart, see what we come up with. Goldman Sachs on a daily, breaking out of, right, consolidation. If you go into ThinkorSwim, you'll find this indicator. This one is a little bit custom. However, the one in ThinkorSwim works just as well. It's called Darbus. And what this is identifying on any time frame, it's identifying consolidation. Why is that important? Well, because for automators, it's great. It's a nice visual that you can see and say, hey, look, when we break out of our consolidation zone, I want to go for a long call. If we break to the upside, if we break to the downside, I want to go for the put, right? Hey traders, if you're finding this helpful, go ahead and tap that like and subscribe. We drop fresh trading setups and automation tips every day. And trust me, what's coming up next could level up your game. The links to learn more about us and our system is in the description below. So it's a very simple way to start looking at maybe institutional flow, give you some ideas, go over to the chart, take a look. And why is consolidation also really nice for option traders? Because after consolidation means that there's going to be a really big move. It's either going to be, accumulation or distribution. And that's really important for traders, especially retail traders, right? We don't have the inside scoop, but we can actually utilize tools like option flow to identify certain stocks that may be on the move. So this one actually is on the move today. So kind of missed the boat on that. Let's take a look at that. Goldman Sachs, 820 call for March of 2026. So they're actually looking for a pretty big move. What are they looking for? Look, guys, they're looking for the same thing that they saw on AAL, a break of consolidation going back up to the previous high. That's what they're looking for. Here is 8, one of the, always look at the round numbers as well as, what you see here on the chart could be very helpful to identify other areas where we've consolidated. And you could see my consolidation bands up here. So we're looking, isn't this right here resistance, right at this prior consolidation band? Yeah. So that can serve as we are right now at resistance on this. So you could actually say, hey, look, knowing that you just looked left on your chart, you could say, oh, wait a minute, a past area of consolidation support, which now is resistance, is right at 781.95. Since I missed this move, I don't want to be eager and get in, but I want it to go ahead and maybe break the next resistance. And we're at the next resistance. That's why you never want to get into a move. Don't get that FOMO, because what will happen is you'll get in and then it'll all of a sudden start consolidating again or making a U-turn, going in the opposite direction. Your initial analysis is correct, but you just need your timing into that event to be more focused. And so on something like this, I would look at this and say, hey, look, since we're at resistance, the prior resistance of before, I would take probably like something, just go a little bit above it. And I call this basically your padding. So I'm padding that next level and saying, hey, if we get above 791.50, we can go for a long call on this. And what's our target? Our target is 820. They actually outline, right? They outline institutional flow, what the actual strike price is, what the expiration is. So you get a sense of what the institutions are looking for. If it's really far out, like leap action, right? A year out and the market's just going nowhere, that's a good indication that, the institutions are just parking money. They're just parking it. They kind of have a sense of where the market's going, and they're just kind of waiting for something. Could be reports, FOMC, it could be a number of things. And so that's how you can kind of identify. What's the other thing that we're looking for outside of breaking our consolidation band here? We're cresting over that zero line. That means that volume is coming in, right? Institutional flow is coming into Goldman Sachs. So this is a good one that you could also utilize. I just showed you on the last one how to automate this trade. So you can automate this one as well in the same manner. And I would just pad this little area right here to somewhere around here. You can make it just like 795, just a little higher than this area right here. You could even go 785 just to break that little area of consolidation, 785 to go to 820. So this looks good, and you got a lot of time on your side. However, this one's going to be expensive, right? We're looking at a $780 stock. Let's take a look and see what a March 20th call would look like. So we go over here, go to that 820, and you're looking at $4,010, right? When we look at those option prices, where you recognize that one option contract controls 100 shares of stock. So you take that 4010, multiply it by 100, and that's where you get how much this is, $4,000 to get into that call. What else could you do? You could go for a debit spread if you have spread authorization. Debit spreads allow us to take advantage of a move, especially when you're directional. You may think, oh, wait a minute, there's going to be some consolidation because we just broke through that. We're at resistance right now. Oh, we broke through consolidation. We're at resistance. What happens sometimes when you get at resistance before the next leg up? You either retreat a little bit or you go sideways for a while. So a debit spread could really be helpful in that. The other thing too is that it brings down the cost, guys. Look at this. So if I wanted to take a debit spread at the money, which is a 790, 800, you're looking at $660 versus the 4,000. So this is another way that you can utilize the type of vehicle that you're using. This is a trade vehicle, right? A long call and a long put, that's a trade vehicle. And by the way, you want to see all the trade vehicles, just come over here to this category and you can see all the different types of strategies. These are really just trade vehicles that you utilize to be able to profit from the marketplace. You have to have authorization, broker authorization for anything outside basically of single. But I actually think they're strengthening that. They're making it a little harder now just to get option buy. So be thoughtful of that when you're going into the broker for the first time and you're looking to open an account. They ask a lot of questions that are specifically designed to see where your education level is and your experience level in options trading. So I have an option video that's called Broker Authorization. And if you type that into my channel, you'll be able to review that. It has a lot of great tips and tricks to get through that, not only application, but sometimes they'll even call you to interview you to give you your spread authorization, which is shocking because they didn't do this years ago. But I guess a lot of people are coming into the system really not having any knowledge whatsoever. So they want to make sure that you know something about options trading before they actually give you that authorization. All right. So that was Goldman Sachs. You could do a debit spread on this and you can automate it just like we did on the first example. Let's go to KWEB. KWEB was interesting because we had a lot of institutional flow for KWEB. Let's see, November 21. And let's take a look at the chart really quick. So in the chart, you can see on a daily that we've been at a support level here. You can see if I move this cursor, you can actually see the consolidation bands. So we're having, let's see, KWEB 42 call. So what this is saying, and we also have momentum cresting above the zero line. I do like that. We also have price breaking above the 20. I like that as well. So what we're doing is we can actually visually see the range that we're in. We have a lot of institutional buying into KWEB right now, and it's showing a 42 call. Where's 42? Right about here. So it's looking for a break, a little bit of volume coming up on a daily, and now we might get up to about right here. So not all the way up to total resistance, but at least to this level. So it's looking for this little level, and you could utilize that as well. So let's take a look at what the cost is for that. Let's get over here to a single. You could see that a 42 call is at about 104. So that's pretty reasonable, right? I try to look at option contracts, and then based on my portfolio size, I'll buy that number of contracts. Usually 1 to 3% of your portfolio value is used. That's, by the way, industry standard. Nothing secret there. So you want to kind of keep those guidelines if you want to stay in the game and really capitalize on your portfolio when you have winners, right? And it also makes then, if I get into KWEB and I'm getting into AAL, I can then identify how many contracts I need for AAL, which is going to be a lot more than the amount of contracts I get for KWEB. And so if KWEB ends up winning or AAL ends up winning and KWEB doesn't, then you can see how the portfolio is balanced. Where if you're just buying, one contract of each, one contract of KWEB or one contract of AAL is not comparable to one contract of Tesla, right? Or Goldman Sachs. And so this is another reason why people's portfolio, they don't see really any gain after a long time of trading, because they're not thinking about like how the price of these products really affect your portfolio when you have winners and when you have losers. So think about that and utilize that little tip. But we were going to take a look at KWEB 42 call 1121. Let's go ahead and use that. Could we also take an at the money? Absolutely. You could take that 41 call right now. Oftentimes when you take the strike price of the target, you actually will pay less for it. So a lot of people really like doing that in comparison just because of costs, especially for a contract that might be out, several months. So as you can see, here is KWEB, and you can start programming your trade just like that with your buy order, buy to open, and your sell to close, sell to close. Now this is called an OCO because it's one cancels the other out, right? So when one triggers, because you have two sell contracts, When one triggers, the other one is just automatically taken off of your platform, so you don't have to worry about it. And this is what makes it really easy to be able to manage several positions. If you've ever been in a position where you seem overwhelmed based on all the contracts you have, you're not putting stop losses in, you got to re-examine charts over and over and over again, you'll be doing that daily, even if you have like just 5 open positions. So you want to be real cognizant that if you do it all up front, everything is managed for you. It's a smarter way to trade. Automation is a smarter way to trade. You can research that and look at the studies that they've already have out with manual trading versus automated trading. That's why all the institutions do it. All right, let's take a look at another one. How about Open? This is relatively a cheap stock. A lot of option coming into Open. They're looking actually for a $10 strike price on this. So when you see that in the option pricing and they have the strike price, that's typically their target. So that's going to be a take profit level. And where is that? That's literally into resistance again. So as you can see, Open consolidating in this range, it actually just sees again, once again, you can see what the commonalities are in all of these option trades, right? You can see the commonality being a lot of volume going into these positions on a daily chart. So on a daily chart, we got volume cresting over the 0 line. We hit support, broke it a little bit, and came right back. And when that happens, right, even though it breaks it here and comes back, you're back into this range again. We're already at the bottom of that range. Institutions are expecting this to go to 10. So this would be another nice play right here. And when can you get into this? You could see that we had a high today of 852. It's dropping right back down. So let's see here. What is that? 755. You can actually use this candle right here. You could actually use the high of this candle as a break to go for that long call if you're looking for a better position instead of just jumping into this right now as it's pulling back from today's high. You could say, hey, look, when we break today's high, I want to get back into this position because you're going to see a lot more momentum get in to the position to go a step higher. Remember, whenever you hit resistance or you start making profit, there's always going to be a little bit of a pullback. And you really don't know if that pullback is going to be severe or if it's just going to be a really light touch of support. And in this case, support is at 755. So as far as I'm concerned, this stock could go back down to 755 before it starts to rise up again. So you could use this candle as a gauge and say, if it breaks today's high, I'm going long. Or if it hits 755, I want to get in a position for a long. And you could limit, right? You could limit your risk amount based on where that 20 EMA is. All right, guys, I hope you have a great weekend. I hope a couple of these stocks take a look at the charts, do some automation, and we'll see you next week.